So if you guys want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. Link will be in the description below. And basically, how did I make $2,219 trading Tesla put options? So this was a swing trade. So looking at yesterday's chart at 12:56, I bought 3 put options, so 12:56 of yesterday. Let's see. 12:56. Oh, on the 30-minute time chart. So 12:56. This candle. So this candle right here. So basically I bought 3 Tesla put options yesterday on May 5th as soon as it approached the 9-day moving average. And then 14:20 I bought 2 more put options. So 14:20, which is not this candle. Or is it? Okay, this candle right here. So basically as soon as it approached the 20-day moving average, I bought more Tesla put options as soon as it reached the 20-day moving average. And then 15:13 was my last time buying Tesla put options. So I bought 2 put options at 15:13. So 15:13. Let's see. So it should be this one, or is it this one right here? So basically, what happened was I was like, okay, this candle I wanted to buy if it did reach the 180-day moving average. So it barely touched it, right? So I was like, okay, let's see if this next candle can try to, reach that 180-day moving average. That's when I'll buy another couple of Tesla put options. That didn't happen, so I was like, okay, let me just see if it can reach the previous candle, the 15 candle, its high of 283.39, right? It got near this 1530 candle, got near to a high of 282.73. So I was like, it's close enough to the number 283. So I'll just buy a couple of more, Tesla put options. And basically that way I can, have my average be in a good spot. That way, in case Tesla decides to go berserk, it decides to go down all of a sudden, my position can be in the green a lot more quicker if I were just to let it ride. If I were just to let it ride where I started originally at. So, and basically at 9:55 of today, let's see, 9:55, which is this candle right here. So basically, you can see that at one point Tesla in the 10 candle wanted to break the 50-day moving average, tried, it got rejected completely, and then it broke through the 9-day moving average, and I was like, okay, pretty much let me see if it can reach this previous pre-market low of 272.51, right? And so when I saw that this candle, got rejected by the 50-day moving average and broke through the 20 and 9-day moving average, I was like, okay, let's see if it can approach this previous low of the 930 candle's low of 272.51, somewhere around near there, right? And that actually happened. So once I saw that number, right, because the low was 271, I didn't sell at 271.36. I sold exactly at 272.51 as soon as I saw that number. So once I sold that position, I basically made a gain of $2,219 trading a couple of Tesla put options. So it's basically what I've been telling you guys, right? It's just like you need to, when you're entering into a trade, right? Whether you're trading calls or puts, right? Start off with a small position, right? Have, that way, in case a trade, your trade, decides to all of a sudden go south, right? You have sufficient money on the side to a dollar cost average. And basically what you want to do, if let's say for this example, right, this trade that I did today, right, well, let's see. So let's say, I don't know, let's say you bought put options as soon as Tesla approached the 9-day moving average, and you're waiting for a rejection, right? You're waiting for the rejection, and all of a sudden it breaks through the 9-day moving average, and now it's going to approach the 20-day moving average. What's your next step there? Basically, you would buy more put options on Tesla as soon as it approaches the 20-day moving average, and then all of a sudden it decides to break through the 20-day moving average. You're like, oh no, what's next? So you're gonna buy a couple of more Tesla put options as soon as it approaches the 50-day moving average. Now let's say all of a sudden, oh well, now Tesla broke the 50-day moving average. Now your next step from here is to patiently wait and see if it can approach the 180 or / 200-day moving average. That way you can buy more put options. Basically what you're trying to do is you're trying to use the moving averages as your support and resistance levels. And whether you're playing calls or puts, you're basically using the moving averages as your like your indicators, your entry points in a way. That's what I've been trying to do in a way, like of trading recently. And basically for the most part it's actually worked. I'm pretty surprised that it's consistently worked. Not all the time. Usually once I think I remember a trade that I did exactly how I explained to you guys, and then all of a sudden it just broke through the 180 / 200-day moving average that day, and I was like, okay, I think this is it. I don't think the position is in a good spot. I'm gonna sell out for, if I recall, that trade was down 30%. So I was like, okay, I'll take the 30% hit. I'll just move on to the next trade. Eventually, these trades, right, that I'll be trading next will have to be a little bit more, I guess, more tight on the entry points, and a little bit more, I guess, high. I have to aim for higher percentage targets now, instead of being aiming for the 10% target or 5% target. I'll have to aim now for a 15 or 20% target now. That way I can recoup that loss of that 30% loss that I took in the previous trade. So basically try to use the moving averages as support or resistance, and then try to dollar cost average along the way. That way, whenever that particular stock you're trading decides to make a big move, you won't be in a bad spot. Basically, once that particular stock makes that big move, you'll be in the green a lot more faster, and you'll make a bigger gain. So that's pretty much it. That's how this trade went. And if you guys want to learn how to trade options, purchase the ebook located at worldly41.gumroad.com. And as always, this is not financial advice. As always, take care. Bye.